is recorded as well. What I definitely suggest that you do is always for the exam, you practice exactly in the same manner that you're going to have to sit down and write. So when you're practicing for the exam with either questions in your textbook or past exam papers, you sit there with blank paper and your question and you work them out on the paper exactly as you're going to do in the exam, because then you can gauge how fast you are getting, because obviously speed is definitely an important object in accounting, because students battle with time. That's one of your biggest obstacles in accounting, is finishing the paper in the time given, because we can all do accounting if we can do it slowly and super carefully and go over things, but you have to keep to 1 mark a minute. So if a question is for 20 marks, you've got to finish it in 20 minutes. So that's why it's important to actually practice doing questions by hand, this exactly as you would be sitting there. It's actually the only way to prepare for the exam. And just get yourself piles of scrap paper from somewhere, and you just keep doing questions over and over again until you can do them.
Yeah.
I'm just trying to remember. I don't want to give you the wrong information now. If you guys get an actual answer book for the exam, or if it's blank paper. I know my third year finance students, it's blank paper. It's only, you guys are first year, so you might get an answer book with templates in it, but I'll confirm that for you. Let me just make a note.
So so we won't need to be able to draw those blocks for the ledgers.
No, I'm going to confirm that. I don't know why my memory has gone blank. I just don't want to tell you the wrong thing. But so if you take your workbook, your workbooks that you got with your textbook with all the blank templates. So if you photocopy or you just make copies of those templates in your workbook, and then print a couple of those out and you use those to practice for your exam. Just check, make a note here, confirm that a workbook will be provided. I just also want to make sure that they haven't changed anything.
I'm guessing it's also around about an hour to do the entire exam. I'm guessing.
You get 2 hours. INAC is 2 hours.
Ah, okay. Because I just saw from the past exams, it says an hour plus 5 minutes reading from the 2021.
Let me double check. 1 hour for INAC. I don't think so. No, it's 2 hours. It's definitely 2 hours.
Yeah, so it's just INAC 5111 for.
Yeah, the full-time students get 1 hour for tests. So the full-time students write tests. So they write test 1 and test 2, and that's 1 hour. They get 1 hour for the test, 60 mark test. They get 1 hour, and then your exam is 120 marks, so you get 2 hours.
Okay, I just wanted to confirm. Okay, cool.
Yeah, so that tells you the length. It's 120 marks, and that's 2 hours. So that's you have to complete 1 mark a minute, and you have to watch that. You've got to check yourself as you go through that you are sticking.
Yeah,
that you're sticking to the time.
Yeah,
because as soon as you've taken, what was that? You've watched some of the videos.
Yeah, okay. I think we went through the previous.
The exam papers. Okay, cool. Yeah, and I will be recording some more of those for you this year. I'll pick a different exam paper and I'll record another one so that you've got some different questions and some extra things to go through as well. But there are, yes, I think there's at least 2 recordings already with past exam papers. So if those of you that are ready to start doing exam revision, as soon as your second assignment is handed in, then you can start going through those to prepare for the exams. Okay. Who else? What other questions have you guys got at this point? Anybody else wondering about anything? Nothing else. Okay, so what I see Boykanyo, I see you're online. Did you get my message that I replied to you about the ICE tasks? Just you sent me a message today on Learn about your ICE tasks, and I replied to that. So please just go and have a look. I sent you a message, and it's very important. You need to just make some adjustments on what you've done there. Okay. That is, I was talking there to Boykanyo. I hope I'm pronouncing that correctly. Okay. For the ICE tasks, so this Friday is your final due date for those 4 ICE tasks. So go and double check. Even if you think you've done all 4, go and double check that you have completed 4 ICE tasks. If you can see, as long as you've pressed submit on Learn, then that ICE task is done. So the point of the ICE tasks is that all of your ICE tasks must be done on Learn. So you have to say, for instance, if the activity is 1.2.1, you log on to Learn to the module. The first 1 stands for Learning Unit 1. You'll go to Learning Unit 1. The second number, the 2, stands for Theme number. So you'll go to Theme 2. And then the third number, 1, stands for Activity. So to be Learning Unit 1, Theme 2, Activity 1. And then you scroll down to that activity on the screen, and you click on the activity, and you complete it on screen, following the instructions on the screen. And when you've finished, you click Submit. And that's how I will then receive your ICE tasks. But you'll see there's different instructions for the different formats of ICE, but they are all must be completed on Learn. Okay, so go and double check that, and then if you battle with anything, then just give me a shout. But ICE tasks may not be emailed to or sent to tutors in any other way than doing them on Learn itself. Okay, so I had a couple of students that sent me messages, and they said they were battling with cash books. I just want to check something. Okay, that is correct. That they were battling with the various cash books, and they wanted a little bit of extra practice. So I did post, I think, in your announcements that question 4.8 in your textbooks on page 134, that's a good question because it covers all 3 of the cash books: cash book, receipts, payments, and petty cash. And in your videos on YouTube, I have gone through that whole question. There's 2 videos. The one I do the payments, and in the second video I do the, or vice versa, the receipts and the petty cash. So go through those videos, and that will cover question 4.8. And then this evening, I'm going to go through question 4.12 on screen with you, so that you can again just get some more practice in how do you do the calculations for each of the different transactions. Sorry guys, I forgot to put my video on. How do you do all the calculations, and what does it look like when you enter the transactions into the cash book itself? Ulrich, you say question regarding 3.3. Oh, are you talking about your assignment? Yes. If the slip, which is obviously quite possible that your slip might not have any 0 rated items on it, and then yes, just say no, and then you say no, it doesn't have any 0 rated items because I did not buy any, and then give an example maybe of what a 0 rated item would have been, just so that we understand, just so that we can see that you understand what that would have entailed. But I think that was worth only 1 mark, so you don't need to go into a very long explanation there. Yeah, so just for 2 marks, so it says, are there any? So you would say yes or no, and that will give you 1 mark. And then the second mark is, if yes, list one of the 0-rated items included in the invoice. And if the answer is no, then you just make some comment, because I didn't buy any, whatever it happens to be, that you can think of as an example. Okay. Okay, so now I'm going to go and share my screen so that I can, have you guys all got your textbooks with you? And then if you've got your textbooks with you, hopefully then go to page 137. Hopefully that page number is, it'll be there or thereabouts, if you've got a different version of the textbook. And question 4.12. And then I'm going to go through the solution on screen for that question. So I'm just going to share my screen so that I can bring that. I don't want to share my file. I want to share my screen. Okay, there we go. You should now be able to see my screen. And I am going to, okay. So this is the question that you can see here. We are the bookkeeper of Maxi Suppliers. The business is a registered VAT vendor, and it trades only with other registered VAT vendors. So what are they telling us? Why are they telling us that information? The business charges 15% VAT on all its sales, and all amounts are inclusive of VAT unless VAT is not applicable. Why are they giving you that bit of information? Why is that important? And especially this bit here, unless VAT is not applicable. What would that mean? Can you think? If you have a look at the list, have a look at the list of that table of transactions. So when you look at that list, that table of transactions, it doesn't say anything about VAT or anything else. It's just got one column with an amount at the end, and it's got one amount in it. Okay, so if they did not, yes, exactly, so that you know that there is VAT included on any of those amounts. So that the rand value in the amount column, you now know that that amount is inclusive of VAT. In other words, it's the 115% value, because it's the original sales or purchase amount plus the 15% VAT included, so that you then know what calculations to do with that amount. So in the question, they say, just see if I can close that. I don't need that anymore. Why can't I get there? Sorry, guys. Just close this and then I can go back to your screen. Hopefully it's not going to, aha, there we go. Okay, so you don't quickly skim over this, but this sort of information in your question and then just go straight to the transactions and start entering. You never know what they're going to tell you in this information, so you need to read it very carefully. VAT is 15% in this question, and all amounts are including VAT unless VAT is not applicable. So what do they mean if VAT is not applicable? Give me some examples of a transaction where VAT would not be applicable. What can you think of? Yes, exactly. If there was a 0-rated supply, then that amount that we're looking at would be the only amount that we're going to deal with, because there is no VAT added to it, because it is 0-rated. So either a 0-rated supply or an exempt supply. And what's the third instance? where that would not be applicable. In other words, we would not be able to claim the VAT back because we are going to fill these transactions in on a cash book payments, which means these are purchases. Yes, exactly, Nalini. Very well done. Non-allowable. So if the supply is non-allowable, what does that mean? What does non-allowable mean? It means what is the business not allowed to do with that particular transaction? If the supply, if it's a non-allowable supply. Yep, that means they're not allowed to claim the VAT back. Okay, they can't claim the VAT. Yes, they can't claim the VAT as input VAT. Okay, because remember, on all, if you're a VAT registered vendor, that means on all purchases that you make where VAT is included, at the end of the month, you're going to make a list and you're going to total that rand value of VAT, input VAT up. You're going to send that list to the receiver and the receiver is going to refund you that money. In other words, you are going to claim the VAT back. But there are certain suppliers where a business is not allowed to claim the VAT back. And that's your list of non-allowable items, which entertainment expenditures is the main one that you guys come across in your questions. So non-allowable just means that the business is then considered to be the end user of that particular item, which is usually like a consumable in terms of entertainment. In other words, it's not a business expense that the business is incurring in the production of whatever goods or services they make to sell to other people. If it's something that you've purchased, that you are the end user, like you've bought cans of Coke for your staff are all going to drink that Coke, and it's got nothing to do with producing your supplies that you're going to sell to other people. So therefore, you have to pay the VAT as the end user. You can't claim that VAT back. It's not considered to be a true business expense. Okay. So it is important that you understand that, because when you're going to go through a long list of transactions, and for each transaction you have to decide, is there VAT included on this transaction? And if there is VAT included on the transaction, you have to decide, am I allowed to claim it back as input VAT or not? And if it's or not, then it forms part of the cost of that item. So as the bookkeeper, we've been provided only with the source documents for the month of April necessary for the preparation of the journal specified below. And in this question, we're going to just do the cash book payments. And the business uses the perpetual inventory system. So it's always very important that you take note of which inventory system the business is using. And that trading inventory is marked up by 60% on cost price before any given trade discounts. A lot of this would be applicable if we were doing the cash book receipts as opposed to the cash book payments, but we still need to take note of this. Okay, and then also unless otherwise specified. So sometimes in a question, they'll tell you at the beginning, inventory is marked up by 60% on cost price, but then there might be one transaction that they say this particular transaction was only marked up by 50%. So always keep an eye out for that. Sometimes they do give you that information as well. So these are the details that you've got in your textbook. So let's just go and have a look at these two transactions where they've got a question mark for the amount, because we have to calculate what that total rand value of that transaction was. So have a look at this one over here. We've got, oh, I don't want that one. We have purchased from Keyland CC trading inventory, which had a value of 37,154.24 rand as the gross value, but the Keylan has given us a 10% trade discount. So how much did we pay Keylan for that inventory? I also want you to go make a note of, let me just write it on here and I'll put it in the chat as well. This is a very important question. It is in the next learning unit. Question 5.2 is the question in your textbook that explains trade discounts and settlement discounts. So this question is jumping the gun a little bit, but hopefully you should still be able to work your way through that. So when we went to Keylan, we purchased the inventory and the total value of it was this 37,154. But then they said because we're such a good customer, they're going to give us a 10% trade discount. So how much was the invoice for that Keylan made out to us for that sale? We're going to take 37,154.24 and we're going to subtract 10%. So the invoice that they gave us is actually only going to be for 33,000. Okay. So they took 10% off the full trade value of those goods and they only charged us 33,000. They gave us a trade discount. So a trade discount is always deducted before the total of the invoice is calculated. Okay, so we never reflect that value of the trade discount in our books anywhere. In our books, we will only record this total amount excluding the trade discount already. Okay. And then the other type of discount that we get, so that is trade discount. We deduct the discount up front and then calculate the rand value of the invoice. When we have got settlement discount, what that means is that we purchased our goods from the supplier. They invoiced us and we went home with our goods. And then 30 days or 60 days later, when we paid for the goods, they said they would allow us 5% settlement discount. So that means that we're allowed to take that discount when we make the payment for the goods. Okay. So I'm going to, instead of writing this all over here for this number 20, I'm going to show on the solution. I've already done some workings there that you can then follow. So this one is when we settled our total account that of all the money we owed to Devon traders, we were allowed to deduct 5% settlement discount. And they tell us in this transaction at the beginning of the month, we had an outstanding amount, 6374. Then during this month, we purchased new inventory for 27,715. And then we also returned to the supplier an amount of 2771. So using those three amounts, you would then calculate the total rand value that you owed to Devon traders. And then you would subtract 5% from that total. And that would then be the rand value that we actually physically paid them. Remember this list of transactions, these amounts here are the amounts that we paid all of these various suppliers. Okay, so now you follow that in your, you follow those transactions in your textbook. And I want us to go and have a look at the solutions here. So now we're going to have a look to see how each of these transactions should have been entered into the actual cash book payments itself. So just have a look at these headings that I've notes that I've made for each column. So we know in all of our journals, document date, details, folio, those are always common. All of the journals begin with those 4 columns. This column here, details, sometimes this is slightly different. When we've got a cash book payments, this column is the name of the payee, which means the name of the person that we are paying the money to, person or company. So the only thing that goes in this column is the name of the person being paid, not a description of what you purchased. Okay, we want who was the payment made to. And if we paid cash or we drew cash out of the bank for any particular payment, then all we write in that column is the word cash. So you'll see there we made a cash payment, there we made a cash payment, and there we made a cash payment. We don't write there what the cash was for, we only write the word cash. And then over here in the general ledger, the details column, if it's a sundry amount, that is where we can see what it was that cash was used for. Okay, there and there. So it is important that you get that right. The correct words must be written in each of the columns. Then this is cash book payments. So our first column is always the main column. So cash book payments, our main column will be bank. And this first amount is always including VAT. This is the amount, total amount that we actually paid out of our bank account, which is always going to be the total amount that we owed to the supplier, which will then be the amount in that column in your textbook, because that's the total amount that we owe them, excepting in the case where we were going to deduct 5% settlement discount. Okay, so if you think about it, if I buy something from a company, the money that I pay them must be the total rand value of the invoice. That's what they're expecting me to pay. So that's how much money goes out of my bank account, the total of the invoice, including VAT. That must belong there. Then, because this is the cash book payments, our next column is creditors control. And the reason that we've got a creditors control column in this particular question is because this business does purchase goods on credit. They don't always pay cash for everything. Sometimes they buy goods from a customer that they're going to pay later. So even though we actually only do credit transactions in Learning Unit 5, this question has included. So we'll see here in the creditors control column, we've got 2 amounts there, which means that our supplier, Alfie Suppliers and Devon Traders, we purchased from those 2 companies on credit, and we paid money off on our account in this particular month. So when we pay them, we have to pay them the full amount, including VAT. So that's why in the creditors control column, that is also the including VAT amount, because that is how much did we pay our creditor. In other words, how much are we going to take off, deduct from our account owing to that particular supplier. And we will always deduct the total amount that we purchased for. Okay, so you'll see that in bank and creditors control and bank and creditors control, those 2 amounts are the same amount, which will be the including VAT amount. Then our next column is the VAT column. And because this is cash book payments, this is then input VAT. Remember, I told you at the beginning, hopefully you still remember, goods that are coming into the company. When I purchase them, the goods are coming into the company. That's called input VAT. What inputs am I buying for my company? This column, we have to calculate the rand value of the VAT only, and we write that amount in the column. And then all the other columns to the right of that, The amount that goes in there is the excluding VAT amount. So I take the including VAT amount minus the VAT, and that equals the excluding VAT amount. So we are separating the VAT from the excluding VAT amount into separate columns, because the VAT must go into the input VAT column, because I'm going to claim that back from the receiver. The receiver is going to refund me this VAT. So the only amount that remains in my business as an actual expense is the portion of the purchase that is the excluding VAT amount. That remains in the business's books. And we only write the VAT down in this column if VAT is applicable and the item is not zero rated, it's not exempt from VAT, or it's not non-allowable. So these ones here where we've written the VAT amount in the column, and I'm going to claim that 15,000 back from the receiver. That means these are all standard rated items that I am allowed to claim the VAT back for. Okay. So I've written at the top here, the bank column is the total amount of payment made. Remember, this is cash book payments. These are actual payments that I've made. The creditor's control will also be the total amount that was paid to my creditor. The VAT amount is going to be the VAT claimed as a refund from SARS. And then the trading inventory column will be the cost price excluding VAT that was paid for the inventory. And in the amount in the sundries column will be the cost price excluding VAT that was paid for whatever this particular item is that I paid for. And these rules will never change in each of these columns. These two will always be including VAT. This will always be the VAT only amount. And these columns here will always be the excluding VAT amount. Okay. Except in the case of, let's find where we couldn't claim the VAT back. Over here, look at office refreshments at the bottom. So office refreshments we know is a form of entertainment. So that means it's non-allowable. I am not allowed to claim that VAT back. So I can't separate. Here's the total amount that I paid to the cafe for the office refreshments, 4,729.64. I may not deduct the VAT because it's non-allowable. So my total expense that must be charged to office refreshments is the same total. Okay. And the rule is, if you look at the bottom, remember our journals that we complete is a summary of similar type of transactions that took place all the way through the month. So in date order, I list all the payments that I made through the month, and then I total these columns at the end of the month. And it is only these column totals that get posted to the general ledger. So in effect, we're creating the journal entry. We fill in this whole journal, and then these totals become our journal entry. So remember, in every journal entry that we post to the general ledger, the debits must equal the credits. So because this is the cash book payments, the bank is going to get a credit because my bank is decreasing because I am paying money out of the bank account, which means that all of these other columns to the right will get debits. And if you add these three together, those three amounts, those three debits, they will exactly equal 851.27, which is the credit. So you always test at the bottom to check that your journal entry balances. Do your total debits equal your total credit. If this was the cash book receipts, the bank column would be getting a debit, and these columns here would all be getting credits. Okay. So for office refreshments, because our debits must equal our credits, my bank is getting a credit of 4729.64, which means that my office refreshments must get a debit of 4729.64. Sorry guys, I've put this in the, here's my bank. Let me just type over the top of this. Let me see if I can fix this. Here's my bank column. This over here is a debit, not a credit. That's the creditors control column. I was just misreading the columns. Okay, so my bank column is getting a credit because it's payments. If this was the cash book receipts, bank column would get a total debit, and then all of these columns here would be the other way around. So all of these debits added together, 50,851, 15,725 plus 96,819 plus 64,590 equals 227,986. So all of my credits equal 227,986 and my total debits equal 227,986. So this office refreshments, as I was saying, I'm going to credit bank with 4729.64 and I'm going to debit office refreshments with 4729.64 because my credits must equal my debits. And those two amounts are the same in this particular transaction because I am not allowed to claim VAT back. And then also here in the instance of wages and salaries, there's no VAT added to wages and salaries. It's not a VATable supply. So there again, I'm going to credit bank with 771202 and I'm going to debit wages and salaries expense account with 771202. So again, my total debits equal my total credits for that transaction. You guys are very quiet with the section. Any questions? Are you guys managing to follow this so far? Are you following, listening very carefully and following? Any questions? Okay, that's good. If it's nice and quiet, then I know you guys are listening. But remember, just shout, type a question in the chat box anytime that you want me to stop and explain something. Okay, so that's our basic framework of the cash book. Remember also in the first assignment, some students got muddled up with the sundries. We've got bank is our general ledger account name. Creditors control is the general ledger account name for this column. Input VAT and trading inventory are the general ledger account names for these columns, which means that these totals at the bottom for those columns, we are going to, this is creditors control, I am going to debit creditors control. With this next column total, I am going to debit input VAT, and with this column total here, I am going to debit trading inventory. So in a business, we only have a full column in our journals for those general ledger accounts that we will use more than once during the month. So creditors control, I might pay 4 different suppliers. So I need a whole column just for creditors control because I will have more than one entry in that creditors control column. So I want a whole column so I can see all of my payments to my creditors. My input VAT, I will definitely have multiple entries to input VAT. So I'm going to give it its own column. The same thing with trading inventory because the item that I will purchase most often in a month is trading inventory. Trading inventory. Then those other payments that I make during a month that only happen once a month or once every 2 or 3 or 4 months, I'm not going to have their own amount of space for it. So in order to record all the other sundry payments, I draw up this column called sundries with its own amount folio details columns. So what goes in the amount column is just the same as these one as trading inventory. It will be the excluding VAT amount of the purchase. The VAT will be recorded here, the excluding VAT amount in the amount column. And then because I don't have a separate column for that general ledger account, I write the name of the general ledger. I write the name of the general ledger account that is going to get the debit in this details column. So this one over here, I would rather that you used postage and stationery because that makes more sense. In a business, if we've got a general ledger account called postage and stationery, if we buy printer paper, I will debit postage and stationery. I'm just trying to simplify things for you. If you had put printer paper, that's also absolutely fine. But remember, what we put in this details column is not a description of what we purchased. It is the name of the general ledger account that we are going to post this debit to. Because this journal, this cash book, is what I am going to use to post to my general ledger at the end of the month after I've closed off all of my payments for the month. So the general ledger account postage and stationery is going to get a debit of 903.75. The general ledger account petty cash is going to get a debit of 301.251. I can see why they've used printer paper because we've got another postage and stationery here, but that's fine. We've got two amounts that will go to postage and stationery. So we could have had an extra column headed postage and stationery because there were going to be two amounts that were going to it, but it's also fine to have two of the same in the sundry column. It doesn't matter. The same as we purchased, we've got computer equipment. We've also got that twice. There is, I purchased computer equipment twice during the month. But this is the name of the general ledger account that I am going to debit this amount that is in the sundries amount column to. Okay. Exactly. So Ulrich says if you're a freelancer, say a photographer, and you regularly use a makeup artist several times a month, you would definitely in your cash book payments have a column headed makeup artist, for instance. Yeah. So that's all it means is that anything that I'm going to enter more than once in the month, I'll give it its own column. And if I'm only going to use it once or twice, then I'll put it in the sundry column. There's nothing more complicated than that, as in why does it have its own column and why do I put it in the sundry column? So in a business, it's their own choice what they're going to use columns for and what they're going to put under sundries. Hi, Tashreeq. Go ahead.
I'm also noticing what you're saying. So maybe this was, I don't know, it's still, this whole credit and debit is still confusing to me. What I do at work, I'm in the finance department. So we also do credit. So what we do with our journals is that we don't have categories like sections in the journal, in the sense of this is for stationery. So what we have in a section for just an account. So we write the account number. So if you are, debiting maybe the bank or, crediting the bank, and then you're putting it into the stationery or something, whatever the difference might be. And then we have a section for where you just fill in the amount if it's a credit or debit. So you can't do things like that. Because I'm saying we're adding sections to like stationery if you're using it every day, you know.
What does your journal look like? Do you enter in manual journals, or are you just coding the invoices?
So we have manual journals, which we have to do, and then we also have to do it on the computer. So we have journals on the screen. We will select the type of journal. So what we just do is we would maybe just write, let's say the name. Now we add the date, which will for referencing. So maybe it's a ABC. So each transaction will be ABC. That is just for referencing. So we add it on the system. So like, if it's easier to look at journal 123B, then you know that's the line for it. Then we would have another section for your description. So maybe it's adding cash for petty cash maybe or something. And then we do the bank, the bank number or the account number. So it will maybe be bank B1001, which is maybe your bank, your actual bank. And then maybe bank B something, which is maybe for stationery. So then there's a section for debit and credit. So if it's a debit, you put the amount first by debit, but you always first debit. And then you always, the next column will be credit, which means you're adding to that bank a credit to something like that. So that is what we have been doing now for the past weeks, where that's how it's happening in our finance.
Yeah. So it is a little confusing for students that are working directly with a computerized accounting system, because you are kind of taking a bit of a shortcut. So in other words, when you doing it directly onto a computer, you don't see the full journal entry. Yeah. So what we're looking at here on the screen is a full journal entry, where on this page you can see what's getting the credit and you can see what's getting the debit. So you were saying just now your bank, you would write there, say your bank general ledger number is B101, for instance. So at the bottom of this column, and you'll see later on in the textbook, at the bottom of this bank column, you would have B101, which means that you would enter B101 and then you would enter the amount 227,986.66 and then credit. Then creditors control, it would have whatever your general ledger account number is, you would put at the bottom of this column. So if you look over here under sundries, we've got this folio column here. So whatever your account number for postage and stationery is, you would put it in here. So that would say P200. And then that would be P200. Computer equipment, let's say your general ledger account number is C520. And this would must also go to C520.
I see now, and then maybe it might be a very stupid question, but can you elaborate? I mean, it's still sticking. I've been doing now those journals for like days now. I still don't understand the difference between credit and debit. I joined the class late, so maybe that's why you have maybe explained it before. But because I know, because I'm debit, you know, something is going out of my bank account. You know, that's how it's been debit. You know, the credit, which means it's a positive for me. Maybe I must just think about it more. But then it's like a positive for me, a credit, where in a business, it's the complete opposite, and I'm still sometimes better. So is it maybe explain it to me maybe in a more better way if you can. If you can't, you know, it's okay.
No, that's fine. Are you talking about the bank? So the bank in particular is confusing, because in a business you work with a bank statement. So in a bank statement, when money goes into our bank account, on the bank statement, it's a credit. But in our books, it's a debit. And when money goes out of our bank account on our bank statement, it's a debit, but in our books, it's a credit. So go and have a look at, I'm trying to think in some of the previous, if you go through the announcements in Learn, you'll pick up where I've got the links to previous classes that we've had. And I have explained that in a couple of them. So also if I just give you what I've told the students is you use this shortcut, dead click. Okay, so to know what you must debit and what you must credit. So the D at the front of dead stands for debits. So
Okay.
EAD, those are the three types of account that will increase on the debit side. And the C for click stands for credits. So LRC, those three types of accounts will increase on the credit side. So what do I mean by that? The EAD is expenses, assets, and drawings. So if the money that I've spent over here is for an expense, an asset, or it's drawings, then I must debit the expense account, or I must debit the drawings account, or I must debit the asset account. See, that's why those columns are debits, because everything either here in the sundries column or these ones here, because I am making purchases, I'm either purchasing an expense, an asset, or I'm paying money out to drawings for the owner.
Okay.
So that means my expenses or my drawings or my assets are increasing. I've now got more computer equipment. The amount of drawings that the owner took increased. The amount of money I spent on postage and stationery has increased. So then I must debit that account. These three type of accounts here, LRC, that stands for liabilities, any type of liability account, an income account, or the capital account of the owner. Whenever those three types of accounts are going to increase, then I must credit them. So with a liability, if I take out a new bank loan, the amount of my loans is going to increase. I must credit the loan account. I is for income. So if I have got interest income, or I make a sale, or what else? I charge my tenant rent. My income is increasing. I must credit my rent income or my sales account or my interest income account. Because when income increases, I must credit that account. And then the capital account is for the owner. So if the owner contributes more money to the business, I must credit his capital account. So this is what you've got to just learn. Accounts that increase on the debit side is expenses, assets, and debits. And accounts that increase on the credit side is liabilities, income, and capital. And when we say the debit or the credit side, I'm talking about the general ledger account, which is the T account. Okay, remember our T account? So this is the debit side and this is the credit side. So here we've got cash book payments. So when I make a payment, my bank is decreasing. So I must credit my bank account. And my bank account is an asset, but it's decreasing. So because it's an asset and it's decreasing, I must credit it. These other amounts here are expenses or assets or drawings. They are increasing, so they must be debited. So bank is getting a credit because it's decreasing, and expenses, drawings, and assets are getting debits because they are increasing.
Oh. Okay, I'll get there.
Did that help? I know this is, yeah. Don't be hard on yourself, because honestly, that's probably the single hardest thing to understand with accounting. And once you click with that and you get it, then everything else becomes much easier.
It's been weeks where I'm like, because I'm doing it now every day. So it's like for weeks, what am I doing? Because it's so now a routine, but I still don't understand about the debit. When I'm like, listen, debit this account. I'm like, okay, what do you mean? What account do I debit? Whatever, give me it. And that's how I've been working on it. But it's a whole situation with this debit and credit.
Okay, so just remember that and go and have a look at that section in your textbook. And then I'll see if I can find and go and listen to the previous recordings, because I also explain that in one of the previous recordings, one of the I think it'll be the second recording that we did. I went over those basic fundamental rules from Learning Unit 1 and Learning Unit 2.
No problem. Okay, I definitely will do it.
Okay.
Okay. Thank you so much.
Good luck. Okay, pleasure. Good luck with that. Okay, so just so that the others aren't confused, this folio column in the cash book payments, there's nothing written into it in this particular question. But in real life, what you would put in this folio column here is the, in our general ledger, which is our list, our trial balance, the list of all of our general ledger accounts. Each one of those accounts in our trial balance, we give it a number, so that when I refer to, for instance, postage and stationery, I can write the number of that account down in the folio column, and then I can easily find that account, postage and stationery, in my general ledger. So when you fill this in real life, you would write down it's kind of like a code, that what is the code in my trial balance for the postage and stationery account. Okay, so each of these would have an account number, as would bank and creditors control and input VAT and trading inventory. So that every time I wanted to post a debit or a credit to that account, I have to know what number it is, so that I make sure that I go and put that credit or the debit in the correct T account in my general ledger. But they haven't worried you with that in this particular question. Accounting stuff. Okay, that's good. So the others can go and have a look at that as well and see if they can on T accounts. Because the other thing that students really muddle up a lot is they muddle up when we refer to the general ledger and when we refer to a general journal. So the general ledger is our entire ledger system, which is our collection of all of the different accounts that we are using in what we call our chart of accounts or in our trial balance. All the accounts that make up, all the accounts that we are using for expenses and income and assets and liabilities, etc. And all of those are T accounts, because on the left-hand side, we have to make a notation if I'm going to debit the account, and I have to make, on the right-hand side, I have to make a notation if I want to credit that account. So that's why we call it a T account. That's the general ledger. Then the general journal is actually one of your subsidiary journals, just like a cash book payments or a cash book receipts or a petty cash. It's one of the journals that throughout the month we record individual transactions in. And at the end of the month, we then post those transactions from the journal into the general ledger. So just like here on the cash book payments at the top here, we've got CBP4, which stands for cash book payments. The fourth month is April. In the general journal, the page for April would be headed at the top here, GJ4, General Journal for the month of April. Whereas your general ledger, those are the running balances that we continuously update for all of the general ledger accounts that we have in our system. So those are the two main things that students get muddled up with. When do I debit and when do I credit? And what is my general journal as opposed to my general ledger? And what do those entries look like when I'm making entries in my general ledger as opposed to completing my general journal? So those are the things you must just keep revising. And the more you revise, you will become more familiar with them as time goes on. Okay, let's just quickly look if there's anything else here that we want to have a look at in these individual transactions. So let's just quickly go through these transactions. The first one is, excuse me, just one sec. The first one is a payment for business printing consumables. We purchase printing paper. So the name of the company we purchased from Office Suppliers, the total that we paid for the paper, calculate the amount of VAT that is included in this 103,931. I've put the calculations here at the bottom. So to calculate the VAT amount, we take the including VAT amount and we multiply it by 15 over 115. That's how, so I take 103,931 multiplied by 15 over 115 and I calculate my VAT. The excluding VAT amount, 103,931 minus 135.56. That's the difference. That goes under the sundry amount column. And then under the details, I write down either printer paper or postage and stationery, which is the general ledger account that is going to get the debit of 903.75. Okay. Then the second transaction on the 8th, we drew a cash check for petty cash. So all we're doing there is I am taking cash out of my bank account and I am putting it into my petty cash box. So that's just a transfer of cash out of my bank account into my petty cash box. So it is not a sale or any kind of a transaction where VAT is involved. So there's no VAT applicable to that transaction. So I am crediting my bank account and I am debiting my petty cash with the same amount. So that's a transfer out of my bank account into my petty cash box. So I am debiting petty cash because petty cash is increasing. Then on the 9th, I am paying my creditor the amount of money that I owe him. So in this folio column, what this folio column is used for is the, you know, when we have an account with a company, they always give us an account number. So if you've got a Mr. Price or an Edgar's account on your statement, there'll be an account number that's unique to you. So this is the same thing that we use in the folio. In my books, I give Alfie Suppliers an account number so that whenever I'm going to post to Alfie Suppliers, I know I must post it to the account number AS. So that's what that folio column is used for. So the full amount going out of my bank is the 21,099.60. A full amount that I must reduce the amount that I owe Alfie Suppliers by is 21,099.60. I am paying him the full total including VAT. So this Devon Traders is exactly the same. We're paying them, so credit bank and debit the creditors control with the same Rand value. Then Antarctic Supplies, that's another purchase on the 11th of trading inventory. So trading inventory is a standard rated supply. So the total will be including VAT that I am allowed to claim back. So 36782 multiplied by 15 over 115 will give me the VAT amount. And then 36782 minus 4797 equals the excluding VAT amount. And that will go under trading inventory because I purchase trading inventory often. So it's got its own column. Keyline Suppliers is also trading inventory. This is the one where we worked out minus the 10% trade discount. So we write down here the total amount, excluding the trade discount. It's a standard rated supply because it's inventory that I'm purchasing. So calculate the VAT amount, subtract it to get the excluding VAT amount, and that also goes under the trading inventory column. Then Office Stationers on the 14th, I purchased pens. So buying pens and stationery for my business is a standard rated supply. So that 45188 does include VAT that I'm allowed to claim back. So calculate the VAT amount, subtract it from the total to get my actual excluding VAT expense amount. And under the details column, I write the name of the general ledger account that will get the debit. Then on the 18th, I purchased from Incredible Connection a PlayStation 3. So what do we use a PlayStation for? Do you think that a PlayStation is going to be used for business purposes or for putting in the staff room so my staff can play games at lunchtime? Yeah. We can assume that, yes, exactly. We can assume that that would be for entertainment purposes. So then what happens? It's entertainment. So when you go to Incredible Connection and you purchase a computer, it is a standard rated item. So there is VAT included on the invoice. But what's going to happen in this instance? Because it's an entertainment item, we are considered to be the final end users of that item, so therefore we are not allowed to claim the VAT back as input VAT. So that means with that item, I'm going to put the full including VAT amount under bank. I'm not allowed to claim the VAT. It's non-allowable. And so the full amount, including VAT, must become my expense, or in this case, the total rand value of the asset. My computer equipment asset is going to increase by 37,505.71, the full amount including VAT, because I'm not allowed to claim the VAT back, and my credits must equal my debit. So the left side of my journal entry must exactly equal the right hand side. So those two amounts must be the same. Then we come to Devon Traders on the 20th. So this was the one where we've got settlement discount. So if you have a look over here, I've got this number 2. At the bottom over here, I've got the calculation as well as over here. So if you look at the bottom, we had they gave us these values. Our opening outstanding amount was 6374. We purchased new inventory for 27715, and we returned inventory for 2771. So opening plus purchases minus returns equals 31317.55, which is the total amount that I owe them. Then they said, because I'm paying them on time, I'm allowed to deduct a 5% settlement discount when I pay them. So I don't have to pay them that full amount of 31,000. I'm going to minus 5%. I only have to physically pay them 29,751.67. So that is the amount that's going to come out of my bank account, the amount excluding the settlement discount. So then on this amount, I work out, sorry, this is a payment of a creditor. So then that total is the amount that I'm going to reduce my creditor's control by. I'm not going to give you the other side of the entry. So the difference between the 31,317 and the 29,751 is the settlement discount. And that has got we then will go and record that in the general journal. Okay, so settlement discount will be recorded in the general journal. As a separate journal entry. If you go and have a look at that question 5.2 in the next chapter, that explains exactly how that works, and it will also give you the general journal entry. I just don't want to do it with you right now because you don't actually do it in Learning Unit 4. You only do that in Learning Unit 5. Then our transaction on the 21st is the owner drew cash for his own personal use. So we write the word cash down under name of payee, and the total amount that he drew goes under bank, and the total amount that he drew goes under sundries amount, and that's going to get debited to the drawings account. No VAT. When the owner takes cash, all that we're doing is we're transferring cash out of the business's bank account into the owner's bank account. It's not a sales transaction or a VATable transaction. Then on the 25th, we purchase also a computer equipment from IT Land, but what we purchased this time is the cash purchase of a server. So we know that a server is something that we're actually going to use in our computer room as part of the business's computer equipment that they use to run their business. So that is a legitimate business expense. So when we purchase a computer, it will be a standard rated supply. So 772708 will include VAT at 1%. Because we are going to use this computer in our business, we are allowed to claim that input VAT back. So calculate the amount of the VAT, and then the excluding VAT amount is then the RAND value that we debit our asset account computer equipment by, to show that our computer equipment has increased because we purchased a new computer. Then on the 26th, we purchased trading inventory from Arctic Suppliers. So trading inventory, total amount of our purchase, including VAT. It's a standard rated supply, so we can claim the input VAT back, and minus the VAT equals debit trading inventory with the excluding VAT amount. Then on the 30th, we did that one already. That was, we paid for office refreshments. So because that's entertainment, there is a standard rated supply. In other words, the cafe would have charged VAT on the invoice, but because we are not allowed to claim the VAT back, we don't put anything in the VAT column, and the total amount is then debited to office refreshments. Debits must exactly equal the credits. And the last one is cash. We are paying wages and salaries for the month. 771202 is coming out of our bank account, credit bank, and we must debit the expense account, wages and salaries, with the same amount. Wages and salaries is not a standard rated supply. There is never VAT charged on wages and salaries, so no VAT is applicable. So those two amounts there are exactly the same. And you can always check that you've done your calculations correctly at the end. When you add up your bank column, that's the total amount that's going to come out of your bank, credit bank. When you add up these four columns here, that total of all the debits must exactly equal 227,98666, so that your total debits equals your total credits. Then you know that when you post these column totals and these sundry totals into your general ledger, that your general ledger will be in balance and that your trial balance will be correct. Total debits and total credits in your trial balance will also equal each other. Because if we make a mistake in one of our journals and then we post that mistake all the way through into our general ledger, then when we print a trial balance, we're going to see that our trial balance will be out of balance, and we'll have to go all the way back through all our subsidiary journals to see where did we make the mistake. So we always do this double check when we finished at the bottom to check that our total debit columns equals our total credit columns at the end of all of our journals. Okay, guys, this was quite a long session tonight, but I wanted to do the full question because this cash book includes all sorts of different transactions, standard rated, non-allowable, all the rest of it. So I wanted to make sure that we covered everything. Okay, so Ulrich says, what is the difference between an abridged invoice and a full tax invoice? You're going to find that answer on, I found it for you. On page 84 in your textbooks. Okay. So go and have a look on page 84. That whole page explains what a full tax invoice is and when it is required, and what an abridged tax invoice is, and when we're allowed to only issue an abridged tax invoice as opposed to a full tax invoice. Sure, Tashreeq, when I've closed off the, when I stop the recording, and then I'll stay online for you. Okay, guys, my throat is finished now. I don't know about your ears. Anybody got any other questions that they want to ask while we're still online? Anything else? So, guys, I hope this has helped you a lot to, again, just keep reinforcing these journals and the different transactions and the different calculations over and over again until you until they start becoming second nature. Okay, so I'm going to end the recording now so it doesn't go on.